Hello students, welcome to Accounting Explained at AccountWise Academy. This is Lata Venkateshwaran. This is the part 3 video of chapter 3, 11th standard accountancy portion NCERT syllabus. The chapter name is Recording of Transactions 1. If you want to look into the questions and MCQs of this chapter and chapter 1 and chapter 2, you can look into the shorts of our channel Accounting Explained at AccountWise Academy. I'll be sharing the link of chapter 1 and chapter 2 in the description box. You can go through it. In this video, we are going to cover accounting equation by solving a question. Rules of debit and credit. This we have seen elaborately in the part 2 video. Now I am going to give a recap of the rules of debit and credit. For this, we are going to group asset and expenses and losses in one group. Because when the asset value increases and when the expenses or losses value increases, we are going to debit that asset account and that expense or losses account. Similarly, when the asset value decreases or when the expenses or losses value decreases, we are going to credit that asset account and credit that expenses or losses account. Next, we are going to group liabilities, capital and revenues or gains in one group. Okay, because when the liability value increases, when the capital value increases and the revenues or gains increases, we are going to credit that liability, credit the capital account and credit the revenues or gains account. Similarly, when the liability decreases, when the capital decreases or when the revenues or gains decreases, we are going to debit that liability, debit the capital account and debit the revenues or gains account. This is a question from your textbook. In this question, we are going to find out that the accounting equation which we have seen in the previous video, that assets is equal to liabilities plus capital holds good. Okay, so the question is as follows. Analyze the effect of each transaction on assets and liabilities and show that the both sides of accounting equation A is equal to L plus E remains equal. So for each transaction we have to prove that A is equal to, that is assets is equal to liabilities plus capital holds good. Okay, so the first transaction is introduced rupees 8 lakhs as cash and 50,000 by stock. Here introduced means that the person has just started the business. Okay, so he has brought in cash rupees 8 lakhs and stock rupees 50,000. When you are going to start a business and when you are going to bring in something new to the business, it is called as capital. So the capital here is 8,50,000. That capital he has brought 50,000 as stock and 8 lakhs as cash. Now let's see the effect of A. Okay, that is assets. So on the right side you make two columns. On the right side it is assets, on the left side it is liabilities plus capital, because assets is equal to liabilities plus capital, right? So you prepare a statement like this. Here cash is how much? 8 lakhs. Inventory or stock, inventory, everything is same. Okay, so inventory is 50,000. So the total of asset side becomes now 8,50,000. And here what did we bring? 8,50,000 as cash because he has just started a business. That becomes our capital. So liabilities plus capital, under capital we will have 8,50,000 and liabilities capital plus capital, it is 8,50,000. So A is equal to L plus C holds good here. Next equation, we will just develop each transaction and see how the business goes. Okay. Purchased plant for rupees 3 lakhs by paying rupees 15,000 in cash and balance at later date. So he has purchased plant for 3 lakhs. Plant value is how much? 3 lakh. Out of this he has paid cash of 15,000 and balance is 2,85,000. That becomes our creditor for that plant or your liability. Okay, so the previous closing transaction, no, closing balance is 8,50,000 for assets and liabilities plus capital is 8,50,000. Now we are going to take that here. See, cash is how much? 8 lakhs. Inventory is 50,000 and now he has bought plant and machinery of 3 lakhs. But he has paid rupees 15,000 as cash, no? So that will be deducted from cash. 8 lakhs minus 15,000. So now the cash becomes 7,85,000. Inventory remains the same 50,000 and plant and machinery now it has become 3 lakhs. So total is 11,35,000. That is the A. Okay, assets. Now let's see. So creditor or liability has increased to 2,85,000. Okay. So liabilities has now increased to 2,85,000. So you are writing under liabilities 2,85,000 and you have taken capital 8,50,000 closing balance from the previous transaction here 8,50,000. So capital remains the same 8,50,000. 2,85,000 plus 8,50,000 is 11,35,000. So A is equal to L plus C holds good here also. Next transaction is deposited rupees 6 lakhs into the bank. Okay, so when you deposit money into the bank, your cash is going to be decreased and your bank account is going to be increased. So now we are taking the closing balance as such from the previous closing balance. Okay, cash is 7,85,000, inventory 50,000, plant and machinery 3 lakhs. Everything taken from the previous closing balance. Now, how much you are depositing? 6 lakhs. So what did we see here? When you deposit money, your cash is decreased. So decreased 6 lakhs from your cash. So you are decreasing 6 lakhs from your cash. So the cash balance now becomes 1,85,000. Next, inventory remains the same 50,000. Plant and machinery remains the same 3 lakhs. And now you are introducing new thing called bank and you are adding 6 lakhs to it. So when you add 1,85,000 plus 50,000 plus 3 lakhs plus 6 lakhs, it becomes 11,35,000 A assets. Next, liabilities remains the same as of the closing balance of the previous transaction 2,85,000 and capital also 8,50,000. There is no change in it. So you take the same amount here. When you add it, liabilities plus capital becomes 11,35,000. Both remains the same. Next, purchased office furniture for rupees 1 lakh and made payment by check. So when you purchase office furniture you purchased. Okay. And how did you make the payment? By check. By check means you have made the payment by bank. So you have to reduce bank by 1 lakh. And you have to increase the furniture by 1 lakh. Okay. So now the last previous closing balance of the transaction, you are taking cash 1,85,000. Okay, cash 1,85,000, inventory 50,000, plant and machinery 3 lakhs, and bank is 6 lakhs. Now cash remains the same, inventory remains the same, plant and machinery remains the same, bank 1 lakh is decreased. See here. So you are decreasing 1 lakh from bank, and bank becomes now 5 lakhs. And you are adding furniture 1 lakh. So it is being added in the assets 1 lakh. So 1,85,000 plus 50,000 plus 3 lakhs plus 5 lakhs plus 1 lakh is 11,35,000 is your assets. And your liabilities taken from the previous transaction, same. 2,85,000 plus 8,50,000, it is 11,35,000. L plus C. Next, purchased goods worth 80,000 for cash and for 35,000 in credit. So now you are purchasing goods. Goods means you are purchasing stock. Okay. For that you are paying cash for that stock. Total stock worth is how much? 80,000 plus 35,000. It is 1,15,000. That is the total stock worth. Out of that you are paying cash how much? Cash is 80,000 and credit. Credit means you are introducing creditor or a liability to the account. So you are paying by credit means you have to pay the creditor or your liability is going to be increased. How much? 35,000. Okay. So cash has to be decreased by 35,000 and your liability has to be increased by 1,35,000 and your stock has to be increased by 1,15,000. Okay. So let us see, take the closing balance from the previous transaction. Okay. What is the previous transaction closing balance? Cash 1,85,000, inventory 50,000, plant and machinery 3 lakhs, bank 5 lakhs and furniture 1 lakh. Okay. So in cash how much you have paid? You have paid 80,000 here. Okay. 80,000 here as cash for the stock. So 80,000 deduct from 1,85,000. Now you get 1,05,000. Okay. Next, inventory. Inventory is increased by 1,15,000. So you have increased inventory by 1,15,000. So increase your inventory by 1,50,000. Now the inventory becomes 1,65,000. 50,000 plus 1,15,000 is 1,65,000. Next, plant and machinery remains the same, bank remains the same and furniture remains the same. So when you total 1,05,000 plus 1,65,000 plus 3 lakhs plus 5 lakhs plus 1 lakh, it is 11,70,000 becomes your assets. Then liabilities from the previous transaction is 2,85,000. Out of that, what did we do? We have to pay for stock for rupees 35,000. Creditor or liability, see here. So your liability has to be increased by 35,000. Now your new liability becomes 3,20,000 and your capital remains the same, 8,50,000 though. So the total of liabilities plus capital, it is 11,70,000. The next transaction is goods amounting to 45,000 was sold for 60,000 on cash basis. So they have sold goods worth 45,000, that is stock worth 45,000 for rupees 60,000. Now there are two concepts here, that is a cost price and the selling price. Cost price is how much? 45,000 and the selling price is 60,000. So your stock has to be decreased by this cost price. Okay. And how much profit we are going to make? 60,000 minus 45,000. 15,000 is the profit which we are going to make from this transaction, right? Because this is your selling price and this is your cost price. This 15,000, it has to go to the capital account because this is the owner's money and this profit has to be enjoyed only by the owner. So it has to be added back to the capital account. Next, this selling price 60,000. How did we sell? We sold on cash basis. So this 60,000 has to be added back to the cash. In other words, cash has to be increased by 60,000 rupees. Let's see how the transaction goes. So the closing balance from the previous transaction, it is cash, it is 1,05,000. Now what did we see? We saw that 60,000 cash has to be increased by 60,000. So we are adding back 60,000 to the cash, and now the new cash balance is 1,65,000. Next, inventory from the previous transaction, it is 1,65,000. The inventory now has to be decreased by 45,000. So inventory is decreased by 45,000 and the new balance is 1,20,000. Plant and machinery remains the same 3 lakhs. Bank remains the same 5 lakhs. Furniture remains the same 1 lakh. So the total, when you total all these things, you get assets as 1,85,000. Now the liabilities from the previous transaction, it is 3,20,000. It remains the same. And capital from the previous transaction, it is 8,50,000. From here we saw that capital has to be increased by 15,000 because it is a profit and the profit has to be enjoyed by the owner. So it has to be added back to the capital, which is 8,50,000 plus 15,000, it is 8,65,000. When you add this, liabilities plus capital becomes 11,85,000. Next transaction. Goods costing rupees 80,000 was sold for 1,25,000 on credit. Okay. So goods costing. What is the cost price of the goods? Cost price of the goods, it is 80,000. Okay. And it has been sold for 1,25,000. So selling price is 1,25,000. Okay. So now the profit here is 1,25,000 minus 80,000, it is 45,000. We know this 45,000 has to be added back to the capital because it is owner's money. Okay. Next, cost price of the goods is how much? 80,000. So this is the stock which is going out. This is the price of the stock which is going out. So stock has to be decreased. Okay. By 80,000. I'll write it clearly. Decreased by 80,000. Next, it has been sold on credit. See this. Sold on credit means they are going to increase the debtors now. Because they have to pay us. No, the person who is going to pay us are debtors and the person whom we are going to pay are creditors. Since someone is going to pay us, debtors has to be increased. That is, the asset has to be increased. The asset name here is debtor. Has to be increased by 1,25,000. Let us see how the transaction goes. Now the closing balance from the previous transaction, it is 1,65,000 cash. We are taking it 1,65,000. Next, inventory is 1,20,000. What happened to the inventory? Inventory is decreased by 80,000. See here. So inventory is decreased by 80,000. Now the new inventory becomes 40,000. Plant and machinery remains the same as 3 lakhs. Bank remains the same as 5 lakhs. Furniture remains the same as 1 lakh. And now we are introducing new account asset rather called debtors. And it has to be increased by 1,25,000. Okay. So debtors is increased by 1,25,000. When you add everything, you get 12,30,000 as your assets. Liabilities remains the same, 3,20,000. Capital from the previous transaction, it is 8,65,000. Now the profit has increased by, see here, 45,000. So you are going to add back the profit to the capital, 45,000. Now the new capital, it is 9,10,000. Liabilities plus capital, it is 12,30,000. The next transaction is checks issued to the supplier of goods worth rupees 35,000. Okay, so supplier here means creditor. Okay, so what did we see previously? The persons to whom we are going to pay money or whom we are liable to pay money are called creditor. So here, so creditor or liability, that's what we saw in the sum, no? So we have to decrease the liability by 35,000 rupees. So liability decrease by 35,000 since we are going to pay them, and we are going to decrease the bank. Check issued means bank. By bank only we are going to pay. So you are going to decrease the bank by 35,000 rupees. Both amount it is 35,000. Okay, let's see. So closing balance is cash. From the previous transaction it is cash. 1,65,000 remains the same. Inventory is 40,000. 40,000 remains the same. Plant and machinery is 3 lakhs. 3 lakhs remains the same. Bank is 5 lakhs. What did we do here? We paid by bank 35,000. Since we paid, we are going to decrease bank by 35,000. It is now 4,65,000. Next, furniture is 1 lakh. Same remains the same. Debtors remains the same, 1,25,000. So the assets total is 11,95,000. Now liabilities from the previous transaction, it is 3,20,000. Okay, now what we are going to do? We are going to pay them. So we are going to decrease the liability by 35,000 rupees. Now the new liability, it is 2,85,000. Capital remains the same, 9,10,000. So liabilities plus capital, it is 11,95,000. Next transaction, check issued from check received from customer. See here, check received. We have received check from customer amounting to 75,000. Customer means here the person from whom we are going to receive money. They are called as debtors. To whom we have sold goods on credit, they are called as debtors. So debtors has to be decreased by 75,000 rupees. So debtors here, no, they have to be, it has to be decreased by 75,000 rupees. And next, what else has to be decreased? Check. Now what did we issue? Check, no. So bank is going to be not decreased. Bank is going to be increased. So bank is going to be increased. Since we are receiving check, bank balance is going to increase. So bank is going to be increased by 75,000 rupees. So let us see from the last transactions, closing transaction, cash. Cash is how much? 1,65,000 remains the same. Inventory, it is 40,000 remains the same. Plant and machinery 3 lakhs remains the same. Bank 4,65,000 from the previous transaction has to be increased by 75,000. So the new bank balance is 5,40,000. Furniture remains the same, and debtors has to be decreased by 75,000. 1,25,000 minus 75,000, it is 50,000. Total of assets, it is 11,95,000. Next, liabilities. 2,85,000 remains the same. Capital 9,10,000 remains the same. So liabilities plus capital, it is 11,95,000. The last transaction for the question is withdrawn by owner for personal use for 25,000. So when the owner withdraws money for personal use, then that money is called as drawings in the accounting term. Okay, so he has withdrawn for his personal use. From where he will withdraw? Where is my owner's money sitting? Owner's money is sitting in the capital. So capital has to be decreased. Since he has withdrawn money, cash should also be decreased. So let us see how the transaction goes. From the previous transaction, the closing balance for cash it is 1,65,000. Now he has withdrawn for personal use rupees 25,000. So cash has to be decreased by 25,000. So new cash balance it is 1,40,000. Inventory it is 40,000, remains the same 40,000. Plant and machinery is 3 lakhs, 3 lakhs. Bank it is 5,40,000, 5,40,000. Furniture it is 1 lakh. Debtors it is 50,000, remains the same as 50,000. So the total of assets it is 11 lakh 95,000. Next, liabilities from the last transaction we have taken as 2,85,000. 2,85,000 remains the same. Next, capital is 9,10,000. Now, since he has withdrawn money for his personal use, capital has to be decreased. So, decrease the capital by 25,000. So, new capital it is now 8,85,000. Liabilities plus capital is 11,95,000. So, whatever the transaction, our assets will always be the accounting equation assets is equal to liabilities plus capital remains the same. Okay, with this we are completing the part 3 video of chapter 3 NCERT 11th standard lesson recording of transactions part 1. Do like our video and share it with your friends if you find it helpful. Subscribe to our channel which will encourage us to make more videos like this one. If you would like to inquire about the accountancy classes which I take or to get more worksheets for problems with solutions, contact us at account.wiseacademy@gmail.com. Thank you for watching.